Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 4th, and we got a light day today, so there's no economic news releases scheduled for today. So we're going to jump right on over to the headline news here. And so far this morning, the stocks have been a little mixed so far. So it's been, a lot of it has to do with the fiscal cliff, if there's going to be any resolve to it, any conclusion. At some point, it will, but when that happens, we're not certain. And what the results will be, if they're going to keep the same thing or if they're going to make any modifications to it. So there's a lot of uncertainty, and of course, people don't like uncertainty. I know we got a few stocks are kind of making an impact a little bit with different companies making their reportings and such. So that's what's kind of driving the market as well for the stock market. And then earlier today, St. Louis Fed President Bullard was basically making comments as he was at a speaking engagement, basically saying that he feels that the Fed should scale back on Operation Twist, not be spending $45 billion every month on treasuries, maybe reduce it to maybe 25, and feels it would have the same effect by doing the same thing. So that's some comments that were made out to him. And that's it about the headline news. We're just going to move over to the bond market, see what we're doing here. So we had a nice little rally yesterday. It topped up about 21 basis points. So we were able to close up to 105.28 when we were about 105.25. Now we're up another 3 basis points. So these are all pretty much within the same pricing range. So there's not going to be a huge difference or really any difference when it comes to pricing, as it usually takes approximately about 12 basis points until you see any difference in the pricing. So right now, if you figure from Friday, we got about 6 basis points increase so far. So really not much any change. So it looks like we're kind of going in a sideways pattern. We do get some more economic data coming out later in the week with some jobs data, so that could be more of an impact. What we might be needing to either break out and go further up, or even come down if they give us some better numbers than what they anticipated. So stay tuned. Later in the week, we will probably see a little bit more volatility. So as a result, interest rates are about the same as what we've been seeing so far this week. So there really hasn't been any improvement in the rates. So it's hard to say what jobs will look like. Personally, I don't think they're going to look too great. If they are, it's more in the sense that it's because it's probably the temporary jobs, people being hired for the holiday season, for like retails and such. And then, of course, January, we usually see those people going back on unemployment. All right, folks, you guys have a wonderful day. We'll keep it short and sweet for you. And thanks for stopping by and watching. If you guys like to see these on a daily basis, just stop by mikesdailymarketreport.com, sign up, and you get a free email sent to you on a daily basis. Have a wonderful day.